Welcome to another video. If you're new to the channel, I'm a top author on the TRADINGVIEW platform, as well as running an educational company and swing trading full time. As usual, I will be giving some more free analysis and education for all of you, breaking down how you're supposed to be approaching your analysis and trading from a multi-time frame analysis perspective and order flow perspective. So looking at what banks are doing and trading with them. So we have also the new updated COT data that came out yesterday. So let's get straight in the video and provide some free value for all of you. Okay, so let's start the analysis from gold. Now, why gold? Because you are the guys that asked it. Most of you commented below in the last video asking me for analysis on gold. So we will be starting from it. So what do we have at the moment on gold? Now, from a weekly perspective, where we are at a very major high. Okay, the market looks pretty much overextended to the upside. Now, if we go and see basically what is being going on from a COT perspective, what we can see is that banks have been adding their longs all the time. Now we are at the highest level of longs. We have 376k long positions. So hedge funds are massively bullish on gold, and we have also the lowest level of shorts that we had in the last pretty much all the way back to 2019. So shorts are very low, longs are very high, gold is pretty bullish. But if we look at the charts, I would never be looking for a long position in this area. Why? Because what I like to do, I like to look for shorts when the market is at a high and for longs when the market is in a low. And when you say, okay, but you are trading trend reversals. No, I trade basically on lower time frames. So on the monthly, weekly, and daily, I look for direction. But on the 4 hours, that is where I take my entries. But in this particular situation, you can see that on the weekly time frame, we are at a high. Okay, after an impulse, the market is supposed to make a retracement. That is how the market moves. So in this area, what I would like to see is a daily break of structure, and I will now show you why. And then I would like to look for a short, because at the moment, until the banks keep buying and the market is in a high, basically at a high position, I don't like to take my trades. And that is basically part of my strategy. Now, what do we have at the moment from a technical perspective on the daily? Now, on the daily time frame, what we have here is clearly previous resistance, turn support, the market made an impulse correction, and now the market is making the next impulse to the upside. Now, keep in mind that if you look at what is going on here, you can clearly see that what we were waiting for was the market to break this area to the downside. We wanted to see the break, but as usual, we are reacting, not predicting. So waiting for the things to happen, the market to show us what it wants to do, and then we can react to what basically the market is giving us. So at the moment, what we were waiting for was the market to break the structure, and then on the retest, then we could easily go on the 4 hour time frame and look for one of our valid entries. And if the market would have provided it to us, it would have been a very nice short to the downside. Now, at the moment, where is the market? The market is creating a higher high. Now, if we're looking at the structure at the moment, where is the new structure? The new structure is here. Why? Because we have this previous resistance, which is now turn support here. So if the market will go for a retest, we will have supported this area, meaning that if the market will break to the downside, what does it mean? It means that hedge funds are starting to close this massive amount of longs that they have. Keep in mind that they like to take profits as well. So at some point they will need to start closing their longs. Okay. And that is exactly where I want to be looking at. I want to wait for the market to start closing, for the banks to start closing their shorts, their longs, sorry. And then we can be looking for a short position, because at the moment, market is actually in a pretty good area for longs closing. Because if you're a bank, where would you like to close your longs? You would like to close your longs at a high, and that is exactly where the market is. So as usual, what we will be doing with the students, we will be waiting for this area to break to the downside. If the market will break the structure to the downside from a daily closing perspective, then on the retest of this area, what we will be doing, we will be monitoring price action on the 4 hour time frame, waiting for one of our valid entries. And if the market will provide us one of our valid entries on the 4 hour time frame, then we will definitely be taking the short with a very good risk to reward and probabilities for this push to the downside. Now, where will be our overall downside target? Our target will be this area here. Why will be this area? Because what you can see from the weekly is this is clearly previous resistance turn support from a weekly perspective. So I want to see this area hit for a retracement. Plus, if you take your Fibonacci from the low to the high, what you can clearly see is that overall the 61.8, aka the golden ratio, is pretty much inside of this area. So this is overall the confluence zone that I want the market to go and hit, and is what we will be monitoring with students. But as usual, in a reactive way and not predictive. So first we will wait for the break. Then if the market will make the retest on the 4 hours, we will be looking for one of our valid entries. And if the market will provide one of our valid entries, then we will be taking our entry. That is how you're supposed to be thinking. If then, okay, you need to have a clear set of rules that if certain situations present itself in the market, then you can take your trade. And the other pair that I want to speak about today is Euro CHF. Now, what do we have at the moment on Euro CHF? Now, if we go from a weekly perspective, what we can clearly see is that overall the market has created this overextended M formation to the downside. Now, after an overextended M formation, what do you expect? You expect the market to make a push to the upside, to basically to complete the pattern. Going where? To the neckline, or in other words, to the previous support, now turn resistance, which is exactly in this area. So what do you expect is the market to go for a retest of this previous support turned resistance. Now, if you take your Fibonacci on this impulse, because always remember, if you want information on this retracement, you have to take your Fibonacci on the impulse. So taking our Fibonacci from the high to the low, what we can see that the 50% is lining up perfectly with the structure area. And that is exactly where we want to see the market go and hit. So this is what we have basically from a weekly perspective. Going down on the daily, what we can see is that overall the market is still absolutely in a bearish trend, and also on the 4 hours. So at the moment we have zero confirmation for the short. The market is still creating lower highs and lower lows. Okay, if we go and see what we have from a COT perspective, what we can see overall, if you look at the euro at the moment, we are having a euro that is getting pretty strong. The longs are increasing, but shorts have been increasing as well with the last report, which is something that I don't really like, the fact that basically they added also this shorts. But there is a very good confluence for this long that comes into play if you look at CHF, because CHF, yes, it has been getting stronger. If you see here, the net positions have been increasing, but if you look at what is being going on, look at the longs. Longs didn't really change. Okay, keep in mind, we were at 11K, we are now at 12K. Not many longs added, right? Look at the shorts. We went from 15K to 9K. So they decreased a lot of shorts and didn't really add proper longs. And if you look at most CHF pairs, in all of this time, they have been going to the downside. So while all CHF pairs were going to the downside, they were actually closing their shorts. Now, and when I say they, I mean the non-commercial, so basically hedge funds and banks. Now, if they're closing their shorts, it means that they don't expect price to go much lower, meaning that basically they're going to buy pretty soon, meaning that they're going to sell CHF, because we are speaking about CHF pairs with CHF as the second currency. So overall, what do we expect? We expect CHF to start getting weaker in the short term and also actually the long term. So this means that Euro CHF, if CHF gets weaker, gets bullish. So that kind of connects with what we want to see from a technical perspective here on Euro CHF. But what do we have to wait for? We have to wait for the market to break the structure. Now, in this particular case, where will be the structure? We have previous support here, turned resistance, and we have to wait for this area to break to the upside. If the market will break this area, then what we will have? We will have this W formation. And after a W formation, what do you expect the market to do? You're right, you expect the market to make a retracement. And after the retracement, that is where you have the best probability entry for a long position. So if the market, it doesn't really matter. I mean, it does matter, but at the moment, with this particular price action that we have now, this is what we have to wait for before we can be looking for a long. We have to wait for the break, we have to wait for the retracement, and then that is where we will have the best probabilities and where we will definitely be looking with the students for one of our valid entries on the 4 hour time frame for this very good long with good probabilities and good risk to reward for the push to the upside. On the other side, if the market will make a deeper move than what we will have, basically, in order to be able to take a position, we will have to wait for the market to create an equal high here, then for the retracement, and then here is where we will be looking for a long, basically also having this inverted head and shoulders. So overall, as usual, be reactive and not predictive. Wait for the market to show you what it wants to do, and then just flow with what the banks are doing on the pairs. And another pair that I want to speak about is NZDJPY. And I suggest you keep watching, because in the end, we will also speak about GBP/USD, which is pretty interesting, as you know. So on a NZDJPY, what do you have? Now, what you can clearly see here from a weekly perspective is that we have this M formation. Now, after an M formation, you already know it. You expect the market to make a push to the neckline. Now, if you go and see what is going on from a COT perspective on NZD, what you can see is that overall net positions are massively increasing. We went from minus 40K all the way up to 2K. And you can see the longs. We went from a 10K longs all the way up to 22K longs. So more than doubled the longs. And if you look at the shorts, we went from 52K to 20K. So more than closed half of the shorts. So NZD is getting pretty strong. If you look at what is being going on from a JPY perspective, what we can see is that overall longs haven't been added, actually a little bit decreased with the last report. And if you look, actually, we were at 47K, now we are at 45K. So not really much of a change going on in the longs. But if you look at the shorts, they added a lot of shorts. We were at 60K, now we are at 81K. So they added a lot more shorts than longs, which means that it's good for NZDJPY, because it means that JPY is getting pretty weak in the long term, because obviously they are still accumulating. And overall, what we can expect is the NZDJPY to make a push to the upside. Now, this is what you have to keep in mind, that if you look at what is going on here, we have this clear zone. Now, don't ignore these zones, okay? The market went here, and basically there was some sideways movement. And in this sideways movements, that is where banks like to accumulate their positions, meaning that we have a good probability of the market slipping inside of this area and then making the push to the upside. So as usual, be reactive and not predictive. Wait on the 4 hours for the market to start showing some bullish price action. And that is what we will be doing with students. We will be monitoring price action inside of this area, waiting for the market on the 4 hours to give us one of our valid entries. And if the market will give us one of our valid entries, then we will definitely be taking this long. The first target will be at this zone, which will be a pretty interesting long setup. So this is what we have from NZDJPY. The last pair that I want to speak about is GBP/USD. Now, as you know, on GBP/USD, we have an overall upside target here. And it was pretty clear that we were going to have this big push to the upside. We spoke about it many, many times. We were waiting for the fake breakout here and the close back above this trend line, basically waiting for all the people to start shorting. If you didn't watch my past videos, go and watch them. We were waiting for all retail traders to start shorting the break of this trend line, and then banks would have been able to load up their last positions and basically push the price to the upside. Now, why were we so bullish on the pound? Look at what has been going on. We went from 35K longs to 61K longs, and they closed their shorts in half. So hedge funds are extremely bullish on GBP/USD, and that is why this was supposed to be basically a fake breakout, and we wanted to see the push to the upside, which is now coming, and basically it looks very, very good. Now, how will we be able basically to look at another long on GBP/USD? Basically, what we will be doing with the students, basically we will be waiting for the market to move a little bit higher. Then if the market will make a retracement, basically it will go to retest this area here, which is the previous resistance, now turns support. And what we will be doing, we will be monitoring on the 4 hour time frame, waiting for again one of our valid entries. And if the market will provide to us one of our valid entries, then we will definitely be taking a long with a good risk reward and good probabilities for another push to the upside on GBP/USD. But as usual, we will have to wait for all our rules to be satisfied before we can take a position, because that is how you're supposed to be approaching your trading. Clear rules to follow over and over again. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program by clicking on the link below. It's a very complete program. You first get all the rules of my strategies, and then
you trade them live with me. Each and every day I give you a new daily market breakdown and Q&A session answering all the questions that you asked that day. So you get the answer to any question that you have within 24 hours directly on your student dashboard in video format, so that you understand perfectly the answer to the question. And what you also get is a daily market breakdown showing you how you're supposed to implement the strategies that you have learned in real-time markets. So it's the best program that you can find out there, because none of those programs are actually this complete, because they don't actually teach you in real time how to apply any kind of strategy that they're teaching you. So without further ado, I invite you to go and check it out, or go and check out